Welcome to the Kinvestor Report, where we sit down with industry experts to discuss the latest developments in the Canadian small cap sector. I'm your host, Arlen Hansen. Standard disclaimer, no part of this interview should be construed as investment advice. And although I don't know what stocks we're talking about today, I may own shares in the companies that we discuss today, and I may or may not be compensated by the companies that we discuss today in today's interview. If you find these interviews of value, be sure to join our network, subscribe to our channel, comment in the videos below, and share them with like-minded investors. Today, I'm joined by Brien Lundin, editor of the Gold newsletter and CEO of the New Orleans Investment Conference. As editor, Brien has been in the industry for 50 years, covering not only resource stocks, but also the entire world of investing. But most of us on this channel know Brien for his long-standing publication known as The Gold Investor's Best Friend. Brien, great to see you. Thanks for joining the show today. How are you doing?
I'm doing great for a mining share market that's stuck in the mud. But great to be here, Arlen. Thanks for the invitation.
Well, I don't mean to laugh when we all talk about these stocks being in the mud, but they are in the mud right now.
Yep.
Right?
Yep.
So I'll just hit you right over the head, right out of the gate. 10 to 15 years from now, where's our gold price?
10 to 15 years from now is a lot. We may have gone to $10,000 and back to $2,000 over that cycle. So I don't think anybody knows, or I should hazard a guess. I would say that I think we're in the end game of a multi-decadal trend of ever lower interest rates, ever easier money that started. You know, you can say it started in 1971 when the gold window was closed by Nixon, or you can say that it started in the 60s with the guns and butter deficit spending that started to devalue the dollar, although it was only recognized by a few people like Charles de Gaulle at the time, who started taking the gold out of the US vaults in exchange for dollars. Regardless, once that started, the dollar was, broadly speaking, depreciated over time, not just through inflation, but also through ever easier money that would come in to rescue the economy in any kind of a slowdown or hiccup, recession, or anything. That resulted in a progression of ever lower interest rates till we hit zero in the great financial crisis of 2008, along with a lot of acronyms for programs that came in and injected fiscal monetary adrenaline into the veins of the economy and people's pocketbooks. Initially just Wall Street after 2008, but everybody after COVID. But we've seen that with each crisis where the central banks, and in particular the Fed, tries to manage the economy, they overreact. They steer from one bank to the other as a ship just bounces off the sides of the channel. And so everybody knows we're going to have another crisis. And in each crisis, the policy prescriptions get more and more extreme. So we are in that end game. Things are happening much more quickly now to a much greater extent. You know, in COVID, everything that they did over 4 to 5 years after 2008, they did in 4 to 5 days. And a multiple of that. So the next crisis is just going to really blow your mind what they're going to come up with. And that's my point, that as the markets and people and savers get to expect another crisis where everything's going to, or money is going to get, currency is going to get that much cheaper, the currencies, not just the dollar, but all fiat currencies, just keep losing more and more of their credibility. At some point, there will be a reset where we have to restore credibility to currencies, and that would mean attaching it some way to money, which would be gold. So we are approaching that. Whether that comes in the next cycle that's directly ahead, or the one after that, or the one after that, we are, I believe, in the end game. So yeah, 10 to 15 years, I would venture to say the gold price is going to be much higher than it is today. I don't know what level that will be. I think over the next 3 to 5 years or so, we are going to be approaching $3,000 to $5,000 on the gold price. somehow, some way, whether that comes slowly or very quickly. And I think that's a real opportunity for us right now.
Well, there's always a mania in a bull market, right? And the gold mania certainly will come. And when the generalist capital enters the market, we will all know, right?
Oh yeah. When it becomes the next big thing, and that will happen. That, sure as night follows day, that's going to happen.
Yeah.
So and it may seem fantastical, but if you look at things like that big cup and handle formation in the gold price, that projects to somewhere over $3,000 when that gets resolved, and we're in the handle of that formation right now.
Yeah.
So, if we add 30% to the gold price, we're pushing $2,000. I mean, $3,000 right now.
No, it's crazy. I've seen, well, certainly the GDX and the GDXJ today breaking above their 50-day moving averages off the CPI numbers yesterday. People thinking the inflation slowing down, interest rates are going to, stall or go lower. I'm super curious. Like, a lot of the gold bugs out there were buying gold because of inflation. Yeah, we're seeing inflation. Gold price is doing pretty good, but none of these gold stocks are moving. Like, what's going on there?
Well, that's a long story. It really is. So the gold stocks, first off, the mining share market, the gold stocks, they don't care where the gold price is. They care where it's going. So for them to really get energized, we need to have a consistent uptrend in the gold price. Now, there is a common argument that gold didn't do anything when we saw these high inflation rates over the past year. And I would argue that gold did precisely what it was supposed to do. It predicted those inflation rates. When we came through, when the Fed came in with these really extraordinary monetary rescue efforts post-COVID, the gold price shot up from $1,400 to $2,000. And what it was doing then was seeing the inflationary repercussions of those policies. So it established, on a very much broader sense, it established a new trading range from about $1,750 to $2,000 and stayed in that range until we saw those very inflationary pressures. And then we see the Fed's reaction to it by tightening, really in the most severe tightening episode, or one of the most severe we've ever seen. Gold has traded essentially sideways, then put in a triple top around a little bit over $2,000, even in the face of those headwinds. So what gold is looking at now, and I think other markets, I think the bond market, treasury yields, I think the dollar index foreign currency market are looking at now is beyond the pause and looking for the next down cycle. If you look at the bigger picture and look beyond just the next Fed utterance or the Fed meeting, the broader speaking, the big cycle of interest rates has peaked. And whether we're a quarter point away from the peak or a half point away from the peak, and whether that peak rounds off and we remain higher for longer, they aren't going any higher. They really can't go any higher. So we are there, and now the markets, being the predictive mechanisms that they are looking beyond that and kind of feeling forward into the future for the next down cycle. That's when things will really take off, and really take off for the metals in particular.
Mm-hmm. So I want to talk a little bit about this brick rumor.
Yeah.
Dump all the information you have for all our listeners, Brien. I really want to hear a talking head talking about this brick. Is it real? Is it viable? Can this really happen? What are the implications? You got 20 minutes here. Go.
Well, I won't need all of those 20 minutes. Nobody knows. Probably some people in the treasury offices of the various BRIC nations have a good idea. If they did have a good idea that there was a BRICS currency coming up, backed by gold, all of those officials would be way long gold right now, to the point where we would probably see a reaction in the market. Maybe that's what we're seeing right now. But I'm all, after decades in this business and seeing a lot of these kinds of rumors, the next big thing for gold, like Basel III regulations, et cetera, that gold's just going to catapult higher. I take a somewhat cynical view towards those. It'd be great if it happens. I don't think anybody knows whether it's going to happen. I think there are much sounder, more fundamental reasons to own gold right now. And I can tell you that I am not buying gold because there's a new BRICS currency going on. I'm not buying gold right now because I've already bought all I can. I've got no more to give this market. So,
our safes are full. Our
maybe I
safes
can
are
go
full.
give blood and buy a ducat somewhere, but no. I have bought gold for more fundamental reasons that are, I think, I have much higher confidence in and can be much more assured of. But I'm there. I'm pulling for a gold-backed BRICS currency. I think it's needed, but I think it's a sign of what's going to happen. The reason why the BRICS currencies can't just form a currency block and go out and be all powerful and displace the dollar is because they don't have the dollar's credibility, and they don't have the rule of law that the U.S. has. So what would they logically reach out to? What would they try to grab onto to establish that credibility? It's gold. And I think that, again, the longer term trend is that all of these fiat currencies are going to lose their credibility in the eye of their investing and saving publics and constituencies. And they'll have to lean toward gold to reestablish that credibility. It doesn't really limit them in any way. It used to be, the thought was that gold would be a limiting factor for, impossible to do today, when you need to have some kind of liquidity and increase in money supply to account for the increase in the growth in economies. But you'd only have to back a currency by, say, 20% to reestablish that credibility. The amount of gold out there only has to back or fund whatever's clearing at any given moment in the market. And you can still devalue your currencies. You just change the ratio, change the price of your currency vis-a-vis gold.
Yeah, that's for sure. So I'm curious, in the last 6 months or even longer, we've started seeing central bank buying.
Yeah.
Way more than we've seen in the last 20 years. What's all behind that? Is they know, they know gold's going to $5,000 an ounce and they're just positioning.
Yeah. I think so. I think they sense that the situation is, uncertain, unstable. I'm really ambivalent on it, because I don't place a lot of confidence in the ability of central bankers to predict anything and act accordingly. However, they of all people would know if there is instability in the system and sense that. And another aspect of it is some of these countries that are buying a lot of gold are, China, Russia, and other countries that want to establish some independence from the U.S. and its sanctions regime as the world's reserve currency, issuer of the world's reserve currency. So it is, in line with the views of China and Russia, the geopolitical views of China and Russia, and a lot of the other countries that are buying gold right now, because they want to be able to insulate themselves from policies that are being dictated by others, and policies that are not just in sanctions, but, the kind of spending and deficit spending policies that the U.S. has undergone. It reminds me a lot of the 60s and early 70s, when the world knew that the dollar wasn't worth what we said it was. So give us the gold instead.
Well, a side note, Canada is not one of those central banks that is buying gold. So
Yeah.
shame on you, Trudeau.
Yeah, and they view that, oh, we have a lot of gold in the ground. Well, as you and I know, it ain't that easy to get that gold out of the ground.
Yeah. So where do we go right now? These gold stocks suck, right?
Yep.
All these precious metals suck right now. No one's making money on them except for a very few specific names. If you're looking to kind of get a little leg up here, where are you looking?
Well, somebody asked me a little while back if I've ever seen the mining stock market as bombed out as it is right now. And I said, well, yeah, 1999, 2000.
Yes.
It definitely was. And consider
Yes.
back then, gold bottomed at $252 an ounce. So it was a lot worse then. Now we have a bombed out mining stock market where gold is within 6 or 7% of an all-time high.
And sorry to interrupt, but
yeah.
Stories can still raise money if they have a good project.
Yeah.
You didn't see that back then, right?
Yeah.
And in 2014, 2015, right. I don't care how good your asset was. I didn't care how good your management team was. There was no money. There's still money. There's still money out there, a little bit, but for the right projects and the right management teams.
Yes, I would. That's the point I was going to add to that. It has to be the right project and the right people. It has to be people who have successes under their belt and are working on their next one. So what I look at this is, yeah, it's a bombed out market, but it is a tremendous, really even generational opportunity. You have major mining stocks, the cheapest they've ever been relative to the gold price, right about the cheapest they've ever been, or the metals prices in general. You have junior mining exploration in some cases developers that have proven resources that you can, at least put a wet finger to the wind and engage some value there. You might have some economics, PEA or more advanced economics on those projects, and you can see real value there, and they are selling, on the clearance rack. You can have some level of confidence that if you buy some of these companies today, that in 2-3 years they will be trading for 3, 4, maybe 5 times their current prices. Mm-hmm. That's almost, mining exploration discovery level returns, but with much less downside. So there are tremendous opportunities out there like that.
Mm-hmm. I think in this market with like the malaise, you got to stick to the super high grade stories, like snowline gold, right? Chart also says, hey, relative strength against the market. The chart looks great. Newfoundland gold, my God, some of those drill holes are absolutely insane. So I think in this market, you got to be really paying attention to those super high grade, those super exciting discoveries. But there's still a lot of stories out there that are really highly undervalued based on the resources ounces they have, or maybe they put out a PFS and the market's like, oh shit, they need $1 billion for a capex. But those still can be very exciting stories because they've got the goods. Can you rattle off a few names that you're liking right now in the sector, like on the exploration side, development side, producer side?
Yeah, I'll have to think a bit. You're putting me on the spot here. I can tell you.
I did it again, Brien. Sorry.
Did it again. Well, even as we speak, I'm going to bring up my gold newsletter portfolio so I don't miss any names. But
this is in real time, folks.
Real time. I can tell you right off the bat that I have been a huge fan of Vizsla Silver. I do own it.
Mike Conner and Craig Perry have absolutely killed it.
Yeah. And continue to kill it in a lot of different areas, and they've got a great track record. But Vizsla Silver in particular, by some measures, it's valued at 1/5 of some of its peer group, keeps churning out super high grades, building a tremendous resource. $1.64 right now.
So how do they fix that?
They just keep doing what they're going to do. The market's going to fix it. You
Yeah.
know, they have a lot of infrastructure. They can relatively quickly get into production, and they're building tremendous resources. I don't think they are not doing anything wrong. You know, you look at Great Bear, which is a huge winner for us. They did everything right, and there were times when that stock didn't budge on news, and the story got a bit old and stale. That's okay. If
you go through cycles for sure. And Brien, like I tell you, the phone calls I make to investment advisors, invest on a daily basis, seeing what's being said on Twitter, the pessimism out there right now, is unbelievable. And gold and silver always make a fool out of all of us.
It's gold's job to dump as many people off the wagon as the you know, as it goes higher. And I've seen it over and over. It's going to do that.
Yeah. So going back to some names you like, I threw in names that I thought were interesting, but really you said Vizsla. What else you looking on?
As I'm going down my list, Avino, silver and gold. I mean, they're in production. Their growth profile over the next 3 years, even 3 to 5 years, is going to be tremendous. As they bring on a very large new project in close proximity and expand their current projects. So, and you know, everything they find goes on to the quarterlies, you know, that quarter in production. So it's very immediate response to the silver and gold prices. So I like that one. I like Cassiar Gold. I think they're going to they barely scratched the surface of the land position, and they've got 1.4 million ounces already.
Yeah, and they're fully permitted, right?
Yeah, they're just drilling the hell out of that.
Yeah, I actually saw them at your last conference, and I ended up buying a bunch of stock. The CEO did a great job there.
He does. Marco does a tremendous job. What else? I like Erdene Resource Development. It's not a widely followed company out there, but they have a tremendous project in Mongolia, but tremendous grades near surface. Has the potential. They formed a 50-50 partnership with the largest mining company, or second largest mining company in Mongolia, that's bringing tens of millions of dollars to the exploration program. So they are going to drill it like a pincushion and have the chance to prove up something truly world-class now.
Yeah. What was the name of that company again? Sorry.
Erdene. E-R-D.
Yeah. Okay. Yeah. Speaking of Mongolia, I saw that Step Gold acquired Anacortes Mining, and they secured $150 million debt package to build out their phase 2. What's going on with Mongolia here? Well, there's some assets there.
Yeah, there are, and I think that's a sign that you know, as a regime, as a frontier of mining, it's come a long way. You know, it's not just a big copper discovery. There's a lot more there, and it's a very mining friendly area. It's come a long way. Erdene's property package is exceptional in terms of the high grades, but they've already got somewhere between 500,000 to 1 million ounces of high grade in going toward production, and now have the capital to build the mine, and it will be, I think, the highest grade open pit project in the world.
Wow. What are the grades?
Do
you know the grades?
I believe, and this is just from memory, so I shouldn't say it, but I think it's close to 3 grams per ton.
Open pit?
Open pit.
Oh my God. I think the world average is like 0.7.
Yeah, something like that.
or something like that. No, that's
so they'll have, you know, within a couple of years or so, they'll have revenue, a lot of it, and it's great because it's exploration and development. It's got a backstop of tremendous value coming up,
and some blue sky for investors.
Yeah, blue sky as well, and the upside is higher than I would feel comfortable in saying right now.
Love it.
Yeah,
I'm buying stock right now. That's it.
Really, really helping the country. I
Right.
like, what else do I like? I like fireweed metals,
Oh God, what a fantastic story. Great team, well funded, huge asset.
Yeah, it's just going to happen. You just have confidence in it, and they've got other things. One of the things I believe, and I'm just thinking about this, we just had that big thing with China of germanium and gallium, and halting those exports. And I think that fireweed has a project with those elements in it as well. So yeah, it's a great play. Brandon's a great manager of that company.
Well, that team does such a great job, both on the marketing side, on the stock, but geologically, right? Like they got such a good handle on assets. And that actually leads me to my next question. Would you rather back a management team or an asset?
I think that the world is big enough that you can find both. There's the old saying that a world-class deposit doesn't really care who owns it, but it can be ruined, not necessarily by, destroying the asset, but by destroying the returns to shareholders.
Mm-hmm.
There are companies, many examples out there, and you know them as well as I do, of companies that went from a $20 million market cap to an $800 million or $500 to $800 million market cap, and the share price barely budged because they tried to develop it themselves, or they just financing after financing, dilution after dilution. So the company grew, but shareholders didn't realize anything. But some big salaries were paid along the way. So you have to have both. And as a corollary to that, there are some incredible management teams out there, really smart people who do everything the right way, who just didn't have the luck of finding something.
100%.
Sure, they did everything the right way, and they cut the odds that are stacked against everybody, and they sliced and diced them and lowered the odds against them, but they just weren't lucky enough to come along with and find something. And then there are groups like Discovery Group and Venture Capital that go out there, Ivan Bebeck, and
love Ivan,
and those groups that go out there and consistently find things because they have that mix of good fortune, which everybody has, but recognizing when fortune has handed you something too, and having vision. So
Ivan works so hard. He's at every conference.
Yeah.
He's got the right mix of a great geological team, but knowing how to raise money. Because you're not you can't fully explore a project if you're limited with your capital. So you got to raise big money for huge projects.
Yeah.
And when you get the win, and you make everybody a lot of money.
Yeah, I try not to talk to Ivan because he has a way of having me just die for my checkbook too. I'm in.
Oh my God, yes, I'm down. I made money with him every time, but I have
too. I have to say that's one of the reasons why I grab my checkbook, because I've always made money with him. But
like, you see him on your call display, and you're like, all right, I guess here's another 25 grand. But God bless him, he's made me money every time I put money into his deals.
In his deals, material information is whether he is going on a roadshow.
100%.
It's material information, because if he's going out to market one of his deals, buy it if he hasn't hit the road yet. Because when he goes in and starts talking his whatever his focus is at the moment, you're going to see a bounce in the share price as people jump in.
Yeah. I love this question. People may not. If I'm a gold bull, do I have to be a silver bull? Do I have to be a palladium bull? Do I have to be a platinum bull? Do I have to be a precious metals bull? Or is the investment thesis different across all these PMs?
Well, I don't believe anybody has to be anything. I'm an arch libertarian in that respect, but I do say often that if you like gold, and you should, then you should love silver, because in every bull market where gold has risen for monetary reasons, which is really every bull market, there has to be a monetary dynamic driving gold for there to be any kind of consistent longer term bull market. And in every one of those, silver has outperformed gold. And it will again until it doesn't. Now, that's the key caveat why I don't think people should be all in silver. And the opportunity in silver is that if silver leverages gold, silver mining stocks leverage silver. So you can build leverage on top of leverage, and the silver juniors can absolutely skyrocket when things get moving. But in that kind of great reset where currencies will eventually have to be reestablished with a connection to gold, I doubt that at that point that connection will include silver. So there is a chance that in the culmination of this trend that you will want to be much more heavily weighted toward gold, at least on a risk management basis, because gold is much more likely to be the anchor of choice for currencies. One of the key reasons is that you can take the gold price and multiply it tomorrow by 3, 4, 5 times, and you won't upset any industry. You won't affect the value of any product that gold is involved in, significantly affect the price of any product that gold is involved in, except jewelry. And, jewelers can compensate easily through lower carats. I mean, they would be ecstatic to see the value of their gold holdings go up 4 to 5 times. They would compensate, they would melt everything down, and you'd have like 5-carat gold jewelry and things like that. Or they just raise the prices. So that would be the only industry that would be affected, because interestingly enough, and not coincidentally, gold is the perfect money because it really isn't used in anything else. It's indestructible. It is, easy to fashion, and it just really isn't used in industry or any manufacturing other than trying to make things look good.
Where's your gold chain, Brien?
Well, that is stashed away with my disco outfit.
I would love to see that. Next conference, you are dripping 24 karat gold around your neck.
And that's when I'll perform my rap session too, as well.
Awesome. Tell me, why are these gold stocks so cheap right now?
Because gold has not had a consistent uptrend that investors weren't scared would end in reverse. We've been beaten over our heads constantly. We bounced up against 2050, 2060 3 times and been beaten back every time. I think if we get to 2150, something like that, where investors can say, hey,
all-time high.
This is the breakout. We are literally in uncharted territory, and we've broken out technically, and there is a fundamental picture out there, a macroeconomic picture pointing toward higher levels. I think that's when they take off. I think that's when everything takes off. The mining stocks don't. We talk about sentiment in the mining industry. You talk about what are people feeling on Howe Street and the like. Gold market doesn't really care what the sentiment is in the junior mining sector at the conferences or anything else. Gold moves for much larger, bigger reasons. And when gold starts moving, the sentiment shifts in a flash. You get whiplash watching sentiment shift from bearish to bullish in the junior mining market. And you get that FOMO kicking in, and everybody has to jump in. So memories are short when the market is moving upward.
Yeah, well, that was my question about the dichotomy right now between metal prices and stocks. It feels like we've never seen this before. but we have. And I do think that this is a better market than we saw way back then.
Yeah.
When there was nobody raising money. Like, at least good assets are raising capital, being able to move their assets forward. Good management teams are being recognized. But everyone says, oh, I've never seen anything like this before. Well, I have. And you have. We've seen these cycles, but our memories are short. We forget how painful it was, right? Because we somehow made some money in the resulting bull market off those bottoms. And I'm a big believer that the psychology right now, the fear right now in gold equities, precious metals equities is so extreme. It's like people forget these things run in cycles.
Well,
we will get a turn, and probably for a reason that you and I can't think of, because this is how gold always works, right?
Yeah.
And all of a sudden these stocks will be up 20-30% in a week.
Yeah, and we're approaching, from at least a seasonal basis, one of those periods where, you know, at least if seasonality is the primary influence, the gold price typically drops or bottoms between like mid-July and, you know, in mid-August. And if people can buy in that period, then they can get sometimes a 10 or 20% jump, usually like a 10% jump on the rest of the market in terms of the gold price, because when everybody gets back from their summer vacations in September and gets back to their desks, the gold price is quite often 10% higher than it was, you know, from the bottoms in the middle of summer. And the corresponding mining stocks are up 20, 30, 40, 50%.
Yeah. They just chase them.
Right? Yeah, it takes cash and courage. You know?
Oh, courage, right? How many times have I called the gold bottom? Many times. How many times have I had the courage to actually buy the stocks? Pretty few. It's hard. Right? Like, it's your capital, it's your fear and greed that's running your investment decisions. It's very difficult.
Yeah.
I'm going to end this conversation, Brien, with two questions. What's a management team that you will back every single time they ask for a check?
Oh, well, I think I mentioned a couple of them. Discovery Group, Inventa Capital.
Yeah.
Ivan Biebeck. There are more out there. I'm not sure which ones they are, you know, right off the bat, but yeah, there are more out there. But you look at people who do the right thing, who have a series of successes. Feng is another one that I will back. You know, I've made.
Sorry, who's that again?
Feng, the founder of Silvercore, New Pacific.
Oh, yeah. Okay. Of course.
He doesn't do a lot of deals, but over the 20 some odd years I've known him, he's done, you know, 2 or 3, and they've all been huge successes. So he picks his points and gets world-class assets every time. Yeah.
So that's John Robbins at Discovery Group, Craig Perry at Inventa, Ivan Biebeck. I don't know his private company name, but yeah, those are all fantastic names, and they all have something in common. They understand geology and they know how to talk to the market.
Yeah.
And they work hard. It's really, really important, right? And I asked that question earlier about management or assets. Well, you need a great asset, but you need a management team that understands how to continue to tell the story to the market, because we go through these cycles of malaise.
Yeah.
And you still have to keep your investors interested.
You do. And one of the aspects that I don't think very many people appreciate about groups like that is, you know, nobody bats 1,000. They have companies that don't pan out. Something, you know, they can't get a permit in California or something goes wrong. They have their reputation on that company, and they have their money in that company, and they are going to make it work for you and for them. So it is entrepreneurial capitalism at its finest. They have every incentive to make that deal work, and your interests are aligned because they've sunk a lot of their money, personal money, in that too. They're in the game with you.
Yeah.
So that's a huge part of it, because they will take a company that that tripped up and failed at its original shot, and they'll put something back in there, and they'll find a way to make it work.
Yeah, that's sometimes why I would rather back a check with management, because sometimes assets fail.
Yeah,
right.
absolutely.
I remember working on a deal 10 years ago. We raised like $250 million, project in Kazakhstan, gold project, had huge IRR, raised, 500 million bucks to go into production, and metallurgy didn't work.
Yeah.
Total fail. Management ended up like finding more assets in regard, like to switch it out, created value for shareholders in the end. So I believe in backing management more than assets, because I believe managements can figure their way out through assets.
Yeah.
And currency changes and right, like all the other problems that we have with mining, right? The good management teams know how to navigate that web.
Yeah, and they can take a good asset and maximize your returns from that good asset.
Yeah, and they put money. I know Craig cuts huge checks in his deals.
Yeah.
I know Ivan Bebic does too as well. Like he's always cutting checks, and I look at that too as well. It's like, where's management putting their money in? I don't know John Robbins personally, but I'm 100% confident he's cutting checks in his deals as well. And like, what a career that guy's had. It's just unbelievable.
Yeah. And Jim Paterson too with Harvard Group. The whole group did well with Great Bear, but they aren't sitting on their laurels. They're taking their winnings from that and putting it in a few other companies. And Craig Perry is running Visa Copper.
Yeah.
Coming out of really essentially retirement to actually run the company.
Yeah, I think John Robbins' group is the only group that goes against my saying I'd rather be lucky than smart. Because when they keep hitting, clearly they're smart, not lucky.
Yeah, they are. But if you look at enough projects, there's one that's going to cross your table that it's the decision point. Do they go with this or not? So it takes being good enough to see the vision that this project can grow into something much bigger. And so those groups have the talent to see that.
Yeah. Awesome. Hey, Brien, thank you so much. Really appreciate your time.
Pleasure, Arlen.
Like I can't wait to see you again in October. You run one of the most important conferences for mining companies out there. And I urge you to go to his website. And if you're a public company, look at getting a booth at the show. They're great. I've been there many times, met many very high net worth individuals and investors. Brien, again, thank you so much. If you enjoyed this interview, be sure to join our network, subscribe to our channel, comment on our videos below, and share them with like-minded investors. And until next week, thank you so much.
Thank you, Arlen.